This conference will now be recorded.
Good afternoon. My name is Michelle Erickson, and I am a client accounting manager with Support Kansas City. And as part of my duties, I oversee the payroll processing for our clients. Recently, I've begun receiving emails and phone calls from clients and their employees suggesting that their withholding calculations appear to be off. And usually by off, that means that they're low. So maybe the 2020 tax returns are starting to get filed and employees have realized that they actually owe taxes at the end of the year and they want to know what gives. Well, I believe that the underlying cause for the underwithholding likely relates to the changes that were made to Form W-4 beginning in 2020. I hope that in this presentation, I can provide some insight into the changes that were made and to help identify how the W-4 can be changed in order to right-size the withholding for 2021. So the overall objectives of this presentation will be to briefly discuss the purpose of Form W-4, to look at the changes to the form that occurred in 2020, which includes a brief look at what the W-4 looked like prior to 2020, why the changes were needed, and what information is now needed in order to most accurately calculate withholding for 2020 and moving forward. I'll end with a couple of examples of how to complete the Form W-4 and how changing the way you complete Form W-4 can impact the withholding calculations. My primary focus in this presentation is going to be on step 2 of the new form, which relates to when a single individual has multiple jobs or you have a couple who's married filing jointly and both spouses work. So the purpose of Form W-4 is simply to inform an employer of the information needed to calculate the amount of income tax to be withheld from an employee's paycheck. The form should be updated on a regular basis, especially when you have any kind of a major life-changing event. So if you get married or divorced, have a child, adopt a child, buy a home, maybe you have a child that you were claiming as a dependent, but now that child is old enough to claim him or herself, and they're no longer one of your dependents. So before the overhaul, I said the major overhaul occurred in 2020. So the form before that, income taxes were withheld primarily based upon the filing status of the employee. So whether the employee was single, married filing jointly, head of household, or so on, as well as the number of allowances claimed by the employee on Form W-4. So the number of allowances claimed were based basically on the amount of your expected personal and dependency exemptions. So in other words, in the tax return, personal or dependency exemption, the more personal exemptions or dependency exemptions that you were able to claim, the less taxes you would have to pay. So therefore, the more allowances you claimed on Form W-4, the less taxes that were withheld. I commonly saw before the change in 2020, the Form W-4 being filled out by the employee completing all of the first section with their name and social security number, address, and so forth, correctly identifying the filing status, so single or married. But what I saw as the big key difference was a lot of people, in order to ensure that they received a refund using the old form, they would mark 0 down for their total number of allowances. Because by marking 0, that was the least amount that you could potentially claim, and that would result in the most taxes to be withheld at whatever filing status you marked at the top of the form. So why did we need to make the change? Well, in 2017, there was a major tax reform called the Tax Cut and Jobs Act, and it did a number of things that benefited taxpayers. Namely, it reduced tax rates, it doubled the standard deduction, it increased the child tax credit, but the most relevant change in this tax reform that impacted the need to overhaul Form W-4 was the elimination of the personal and dependency exemption. So remember, I just said that the prior W-4 form, the allowances that you claimed on that Form W-4 relied heavily upon the number of personal and dependency exemptions that you could claim on your tax return. Well, with the tax reform in 2017, the personal and dependency exemptions went away. So those are no longer relevant in helping us to calculate what the withholdings are. So because there was a major change in the tax laws, the IRS also changed the tax withholding tables that are used, that the W-4 information used in order to calculate the new withholding for the new year. The changes that the IRS made to the withholding tables, the amounts that you would use to try to calculate how much to withhold from an employee's paycheck, was intended to right size the withholding, if you will. Ideally, you want your annual withholding and total tax liability to be close to each other. So your annual withholding would be the amount that is taken out of your paycheck throughout the year, should come close to equaling the amount of your true tax liability when you file your tax return, Form 1040, at the end of the year. So the IRS's intention was to right size and make those closer to each other. Unfortunately, the changes to the withholding tables that they made didn't actually work as planned, and many people found themselves not having enough withheld during 2018. So because of the unfortunate incident that we found, a lot of us found ourselves in, the IRS overhauled the W-4, including getting rid of the number of allowances. So now the new Form W-4, withholding is based upon several items now. So it's still going to be based on the employee's filing status. So again, that's whether the employee is single, married filing jointly, head of household, or whatnot. But it also takes into consideration the income from other jobs and sources, the number of dependents that you claim, and any other tax deductions that you might be able to claim as well. Okay, so the intention of actually overhauling the W-4 was to reduce the complexity and increase transparency and accuracy of the withholding system. The worksheet on the previous Form W-4, a lot of people found very hard to understand. And so now, while there are more pieces of information being considered with determining your withholding calculations, the questions are more straightforward and the instructions are more straightforward. You just have to take the time to look at them. This new form now contains 4 steps. Remember previously you pretty much just had to identify what your filing status was and how many allowances. So now you have to take into consideration 4 major areas. So in step one is still very similar to the old form. You're still going to include your name, your address, your social security number, and what your filing status is. Step 2 now asks the employee, do you have multiple jobs, or are you married filing jointly and both of the spouses work? This is a key component here that's going to impact the amount of income taxes being withheld. Depending on, and this is going to be the step that we look at mostly. So depending on how you fill out that information, depending on whether or not you do have multiple jobs or married filing jointly and both spouses work, the steps 3 and 4 instructions indicate that if you do have multiple jobs, only complete steps 3 through 4B on one Form W-4. That's key there. Okay, only make sure that one person is claiming any dependents or other adjustments that need to be made. Usually, the W-4 that you claim that on is going to be whichever W-4 is being submitted to the employer with the highest paying job. Okay, so I think that the IRS frequently asked questions really addresses the question that most people have related to why do I need to account for multiple jobs? I've never had to do that before. Why do I need to do that now? Well, again, there's been an overhaul to the withholding tables, for one. And two, tax rates increase as income taxes or as income rises. So think about the tax brackets. So for a family who is married filing jointly, the first $19,900 that married couple earns in 2021 will have 10% income tax charged to that first $19,900. Then between $19,900 to $81,050, that amount of income will be taxed at 12%. And the amounts just keep rising until you finally get to $628,300. So if a married couple that's filing jointly is lucky enough to make $628,300 or more, anything that they earn above that amount is going to be taxed at 37%. So what that means is the more money that you make, the more money you should have withheld from the combined pay of all jobs, as opposed to the amount that would be withheld if each job was considered by itself. So if you have two jobs and each job pays $15,000 a piece, using the tax bracket, that would be a total of 10% each. However, when you combine those two, you get $30,000, which would put you into the 12% tax bracket. So the more money you make, the more that should be withheld. In step 2, the area that I want to focus on most, there are 3 different options to choose from to help you to determine how much should be withheld if you need any additional withholdings, because there's multiple jobs. On the form A through C, it starts with basically the most complicated and actually goes down to the most easy. So option A is to use the IRS tax withholding estimator, which most accurately calculates the additional tax you need to have withheld. And when you go to this link, which we'll look at shortly, it will guide you through multiple questions to identify if any additional taxes should be withheld and reported on step 4C. Option B is kind of in between. So it's not as complex, it doesn't have as many questions to answer as option A, but it's also not quite as accurate as option A. So with option B, you're going to use the multiple job worksheet, which can be found on page 3 of the Form W-4. So this is an option where usually it's going to be if you've got you and your spouse have only 2 jobs and the higher paying job is more than double the pay of the lower paying job, this option B is going to be a little bit more accurate than option C. Option C is very simple in that you and your spouse only have to check a box at step 2C. Again, with this step 2C, ideally, you would only check the box if the 2 jobs are held at the same time and both have similar pay. So if you and your spouse both have a job at the same time, but say one spouse earns almost twice as much as the other spouse, that's when you're going to want to actually jump up to option 2B instead. And I failed to mention this, the option 2B, if you use that multiple job worksheet, usually only the job that is the highest paying job is going to use that worksheet to help to identify the additional withholdings. So I'm going to take you through 4 different scenarios, and in each of these 4 scenarios, we're going to have the same couple. It's a married couple who files married filing jointly. Mary earns $60,000 per year, or is expected to earn $60,000 in 2021, and John is expected to earn $50,000 in 2021. Both of them are going to be paid semi-monthly on the 15th and the last day of the month. And we're going to make this a super simple example. So we're going to assume no dependents, no additional income, so no interest or dividends or rental income or self-employment income. We're not expected to have any tax credits, so they don't have any dependents. They don't have any student loan interest. They don't have any charitable deductions. And we're going to assume that they only claim the standard deduction. Okay, so we're going to have simply just 2 W-2s reported on Form 1040. They're going to take the standard deduction, and that is it. So in these scenarios that I'm going to go over, the first scenario is the most common example that I've seen if employees are filling out the Form W-4, the new Form W-4. This is what I'm seeing mostly occur. So I'm seeing employees complete step 1 of the Form W-4. Let me show you what that looks like. So here's the example of the W-4 that Mary filled out. So you see that she's got her name, social security number, her address, and up here at the top she's marked that they are married filing jointly. But notice that there's nothing here done in step number 2. And in step number 3, she just completed zeros because step number 3 relates to how many dependents they claim. Well, they don't have any dependents, so there's no tax credits expected there. And step number 4 relates to other income from other jobs, other deductions that you might be able to take, and if you want any extra withholding. So she currently has filled out the W-4 assuming that none of those things exist. John has done the same thing. John has completed his W-4 with his name and address and social security number. Again, nothing is marked here in step 2 and step 3 and 4. They're assuming by putting in zeros, what this is telling the employer is that they don't expect any dependents to be claimed during the year. They don't expect any additional income throughout the year, and they don't expect any additional deductions. So therefore, they have no additional withholdings being withheld. In this scenario, if that's the way they had completed their Form W-4, by the end of 2021, Mary will have had $3,790 withheld from her paycheck, and John will have had $2,590 withheld from his paycheck for federal taxes. That gives us a total of $6,380. So just simply by completing step 2C, so again, we're going to complete step 1 in the same manner. We're going to fill out the name, social security number, address, and the married filing jointly. But now in step 2, because Mary earns $60,000 and John earns $50,000, that's very similar to one another. So they've just decided that they're going to go ahead and mark step 2C. So what would that look like? Well, Mary's W-4, the only thing that would change would be that now she's going to check mark this box. So simply check marking this box is going to increase the amount of income taxes that are withheld from your paycheck. Nothing else is going to change. So we're still showing zeros in step 3 and 4 because we don't expect any additional dependents, we don't expect any additional income or deductions, and so we're not asking for any extra withholding. And of course, the employee would sign, date, and return that to their employer. John's going to do the same thing. So if we're just completing step 2C, you're going to check mark the box on all W-4s for all jobs that are going to be claimed on this tax return. Okay, so again, the only thing that we're doing is we're going to check mark the box at step 2C, but again, we have no dependents being claimed, we have no additional income expected, we have no deductions being expected, so no extra withholding beyond the fact that we've told our employer that we do have a spouse that works. So by simply check marking that box, withholdings will increase. Okay, so, and also I want to clarify that these calculations that I have here assume that the W-4 was completed in the way I just indicated with step 2C check marked by January 1, so all year that's been the withholding. So if that W-4 was turned in to the employer at the beginning of 2021, between both Mary and John, they would have had $10,482 withheld during the year 2021 to help them make sure that they meet their tax liability when they filed their tax return at the end of the year. That's a $4,000 difference between the first scenario where nothing was checked in step 2C. So simply checking the step in 2C for this couple, it increased their total income tax withholdings by $4,000. So now let's look at the third scenario. In the third scenario, we're going to complete step 2B. So again, in step 1, they're going to complete the form as usual. So the name, social security number, address. This time, because we're looking at option B instead of C, Mary is not going to check that box. So now if she, instead of checking that box, decides to use step B, that means we're going to be looking at the multiple job worksheet on page 3. So I need to scroll down to page 3. Page 3, the multiple job worksheet, the step B, you just have to look at, read the instructions. But basically what it's asking for is if you have 2 jobs and or you are married filing jointly and you and your spouse each have 1 job apiece, it refers us to the table on page 4. So let's go down to the table on page 4, and bear in mind there are 3 different tables, and the tables are all dependent upon what your filing status is. So you need to find the table that relates to your filing status. So because Mary and John are married filing jointly, we're going to use this first table. The next table would be if they were single or if they were married filing separately. And then the last one would be head of household. So the instructions tell us we're going to find the salary of the lowest paying job across the top of the page. So John earns the lowest salary at $50,000, so that would be in this column. Mary earns the highest salary, so we're going to find that in this row over here, $60,000. And then we're going to identify what the dollar amount is at that intersection. So we've got $5,490. This number needs to be transferred up here to line 1 of your worksheet. Notice that number 2 says this only applies if there are 3 jobs. Mary and John only have 2 jobs between the 2 of them, so number 2 doesn't apply to them at all. Number 3 line says to enter the number of pay periods per year that the highest paying job is going to receive. So earlier I said that both Mary and John receive pay semi-monthly on the 15th and the last day of the month. So that would mean that Mary would receive a total of 24 paychecks during the year. So line number 4 says to divide the total annual amount by the number of pay periods from row 3. So $5,490 divided by 24 pay periods means that Mary should have an additional $228.75 withheld from her paycheck to ensure that they have enough taxes withheld to cover the fact that they have 2 jobs. So the instructions indicate that we need to insert this dollar amount back on page 1 in step 4C of the form W-4. So if Mary was going through and decided, okay, we're going to go ahead and use the multiple job worksheet on page 3, again, she's not going to go ahead and check mark this box. Instead, she's just going to transfer the dollar amount that she calculated, the $228.75, will be listed here in step 4C, the extra withholding. So this tells the employer to withhold not only the amount that they would already have expected to withheld from Mary's regular $60,000 paycheck, but also an additional $228.75 for every paycheck. Mary would sign this, date it, and return it to her employer. Because if you're using step 2B, you only complete step 2B for the highest paying job, so only Mary is going to complete that step. That means John, because he's the lowest paying job, he only has to complete step 1 as usual. Step 2 he can skip because his wife has taken care of that. His wife has already identified that they're married, filing jointly, and that they've got 2 incomes. So he's not going to include anything in step 3 or 4 either. So he's going to go back to the same way we had in scenario 1. In this scenario, again, if Mary and John had both turned in the forms that we just looked at the beginning of 2021, they would have a total amount withheld from their paychecks equaling $11,870 between the 2 of them to apply towards their tax liability at the end of the year. Okay, so it's pretty simple to complete step 2B. The thing is you just need to actually do it. In the last scenario, again, this is going to be the most complicated version of completing step 2. Again, in step 1, we're going to go ahead and mark married filing jointly. But this time, rather than using just a simple checkbox or completing the simple withholding worksheet, we're now actually going to use the IRS app. It's the Withholding Estimator app. So let me get this over here. So clicking on that link brings you here. So now we're going to click open the Use the Tax Withholding Estimator. Because Mary and John are very simple, they're very basic, they just have 2 W-2s, they don't have any additional income, it's really kind of an overkill to complete the tax withholding estimator, but I wanted to give you a quick look at some of the questions that you might need to complete or might need to think about completing when you're trying to look at the tax withholding estimator if you need to use this. So some things that you should have on hand before you complete the tax withholding estimator is the most recent pay stubs for both you and your spouse, so for all jobs that you're going to include. It's also good to have the most recent tax year tax return completed and in front of you, or at least have an idea of the extra income or deductions that you might have. That's why it's kind of nice to have the prior year tax return, because you can just say, well, if I have the same amount of income that I had last year, what would it be? If I had the same amount of interest, the same amount of dividends, or the same amount of tax credits or whatnot. Okay, so this is just going to walk you through, this estimator is going to walk you through a few questions, and you just have to simply click on the appropriate answer. So for Mary and John, they are married filing jointly. The next question, may another taxpayer claim you as a dependent? Well, no other taxpayer can claim as a dependent, so my answer is no. And they also don't have any dependents that they're going to claim themselves. So answer is no. The answer there is no as well. Question number 3, do you or will you or your spouse hold a job this year with paychecks from which federal income tax is regularly withheld? Yes, both of them have jobs and both of their employers will be withholding taxes. So the next couple of questions will ask whoever is actually completing this estimator, it's going to ask based from their perspective. So I'm going to just assume I'm Mary. So how many jobs do I expect to hold this year? Well, Mary expects to hold 1 job this year, and my spouse, John, expects to hold 1 job this year. Do I or my spouse expect to receive income from a pension during this year? No, we don't expect that. So notice there's also a list of all kinds of extra types of income. So if you expect to collect unemployment compensation, or if you have Social Security benefits, or if you had taxes withheld or made estimated tax payments for things such as dividends, interest, things, you need to make sure that you read through all of these items and check anything that applies to you. For Mary and John, none of these items apply, so I'm going to go ahead and click next. So for my job, remember I'm Mary. For my job, do I expect to hold this job the entire year? Yes, I do. How frequently am I paid? Well, I get paid 2 times a month. My most recent paycheck that I received was on the 15th of March. And the total wages that I expect to receive for the entire year is $60,000. Then it asks me for any bonuses. Well, because I only expect to receive the $60,000, I don't expect to get any bonuses, and I haven't received any bonuses yet so far. So now this next section, this is where it's important to have your most recent pay stub. Okay, so based on my most recent pay stub, Mary has had, which was on 3/15, Mary has had $789.60 withheld. That's kind of just a made up number at this point, but you would enter whatever information came off of your current pay stub. That means that the amount, if she makes the same amount every pay period, then she's had $157.92 withheld every pay period for federal income tax. We don't expect to have any contributions to tax deferred retirement plans. And Mary also doesn't expect to contribute to an HSA or an FSA or any other type of cafeteria plan. If those items apply to you, then you need to answer yes and look at the additional questions that pop up. So now we need to answer the same questions for our spouse. So does John expect to hold the same job all year? Yes. How frequently does he get paid? He also gets paid twice monthly. The most recent date of his paycheck was on 3/15 as well, and he expects to earn $50,000 for the year. He hasn't received any bonuses yet this year and doesn't expect to receive any later in the year, so I'm going to leave those amounts blank. From his most recent pay stub on 3/15, he's had a total of $539.60 withheld year to date. And this most recent pay stub says that he had $107.92 withheld for federal income taxes. Again, because we don't expect anything out of the ordinary, just regular W-2 income, that's it. We don't expect that he's going to contribute to any tax deferred retirement plan, and he's not going to contribute to any HSA or any other cafeteria type of plan. For the adjustments to income, now again, because this is a very simple example that I'm using, I'm going to choose just go to the next step. But if you have things like additional income or tax credits or deductions, you're going to want to click on See Adjustments and answer the questions that relate to you. So I'm going to click on Go to Next Step and then just click Next Step. So for the deductions, we know that they can claim the standard deduction. We don't expect that they're going to be able to itemize, so we're just going to go ahead and assume that they're going to take the standard deduction. If you know for a fact that you can itemize deductions, you're going to want to click on Itemize Deductions and answer the rest of the information that's pertaining to you. So notice that these questions can get pretty involved. The tax credits, again, we don't assume that there are any tax credits. So because this is going to be just a simple, we've got 2 W-2s and that's it, I'm going to choose Get My Results Without Tax Credits. So I'm assuming that there's no tax credits. Again, if you think that you're eligible for certain tax credits, you should click on See Tax Credits and answer the questions that relate to you. So now my results. My results say that the expected tax withholding is $6,384. So if we continue at the same rate of withholding that we have had so far from January through March, we will have only had $6,384 withheld from our paycheck. But based on the rest of the information that I told the estimator, our total tax liability at the end of the year is expected to be $10,181. So that means that if we continue at the same rate of withholding, when we get to the end of the year, we're going to have a tax bill of almost $3,800. Within this estimator, not only will it give you an indication of whether or not they think you're going to be underpaid or overpaid, they also give you the option to adjust just how much overpaid would you like to be. So if you would like to make sure that you're overpaid, and say you want to make sure that you get back $600, you can use this sliding scale to adjust how much you want to make sure that you go over so that you don't end up owing a balance at the end of the year. This box here now tells us what each individual needs to do to adjust their current tax return, their current W-4 now, in order to make sure that they don't owe any taxes at the end of the year, because right now I've set the scale to be at 0. I just want to make sure I don't owe at the end of the year. So expanding these two options gives us additional detail. So it says we need to have an additional $125 withheld from Mary's current tax, her paycheck for the rest of the year, in order to make sure that she's not under withheld at the end of the year. And we also need to have John adjust his W-4 and have an additional $86 withheld. So notice here it gives you the instructions. It tells you what to do. Complete a new form W-4 to select married filing jointly, and then to enter $125 on line 4C. So let's go ahead and do that. So for Mary, because remember Mary was the one that was completing that form. Because we used step 1A, again, we're going to skip check marking this box, because we only check mark this box if we have multiple jobs and we don't do A or B. We're going to leave step 3 at zeros because we don't have any dependents, so there are no expected claims for dependents. We don't expect any other income from jobs, so my expected income from other jobs is 0. My expected additional deductions is 0, but now, based on that estimator, we want to have $125 withheld from the rest of our paychecks for the rest of 2021. John, based on the estimator, says that he needs to have an extra $86 withheld. So again, everything in step 1 stays the same. Because we're using step 1A, we're not going to check step 2C. We don't expect to have any dependents claimed, so again, those stay 0. We don't expect any additional income, so that remains 0. Our expected deductions is 0. but we would like to have an extra $86 withheld from John's paycheck for the remainder of the year to make sure that John and Mary don't owe at the end of the year. So if John and Mary had those amounts that we entered earlier when it asked us for our current year-to-date withholdings, and then for the remainder of the year, Mary had an additional $125 withheld, and John had an additional $86 withheld. By the end of 2021, the total amount of their income taxes that were withheld from their paychecks combined would be $10,389. So now let's kind of like put that all together into one scenario so that you can see a comparison side by side. So first of all, let's look at just estimating what the 2021 tax liability might be. So again, because this is a very simple example, we only have 2 W-2s that are going to be reported on the tax return at the end of the year. Mary earns $60,000, John earns $50,000, so combined total of $110,000. In 2021, the standard deduction is expected to be $25,100. Because we don't expect any additional deductions or any additional income, any additional credits, our adjusted gross income will also end up equaling our taxable income, which is $84,900. So we just subtracted the $25,100 as standard deduction from the total gross. Because the 2021 forms aren't actually available, the 2021 1040 forms aren't available, I had to use the 2020 tax tables to help us to estimate, but that should give us a pretty good close estimate of what the taxes are going to be for 2021. And I got this amount by looking at the 2020 IRS instructions for Form 1040. So there's specifically a page, you find the amount of $84,900 on the table, and you find the corresponding tax that's related to it. So assuming that our total estimated tax liability is $10,264 for 2021, if John and Mary completed their forms W-4 in scenario 1, remember that's where nothing on step 2 was completed. They only marked the married filing jointly and they put zeros on everything else. They would only have $6,380 withheld from their total combined taxes or their combined paychecks. And that would mean that at the end of the year, if their tax liability was $10,264, they would owe $3,884. They'd probably be in for a pretty big surprise at the end of 2021. In scenario 2, by this couple simply checking the box at step 2C, it increased their total tax withholdings to $10,482. So both of them just check marked the box. That was it. It was simple. And now they're expected to get $218 back at the end of the year. But remember that scenario 2 assumes that both spouses' jobs have similar pay. Scenario 2 isn't going to work out as well if the pay are vastly different. Remember, if the pay is vastly different, you would want to use scenario 3, where you complete, at least scenario 3, where you complete the multiple jobs worksheet that accompanies Form W-4. So in that scenario, Mary completed step 2B, that worksheet. John didn't do anything extra in step 2. So they had a total of $11,870 withheld. So in that particular scenario, at the end of the year, if their tax liability was the same, $10,264, they would actually have over withheld their taxes by $1,600. Mind you, this is also federal taxes only. This is not taking into consideration anything with the state. In scenario 4, this one was the most accurate, where we actually used the app. But notice that the app took just a little bit longer. And of course, the more situations that apply to your tax return, if you have more than just W-2 income, the longer that's going to take, but the more accurate that app is going to be. So in scenario 4, where we used the app, our tax liability and our taxes withheld are the closest. So we only over withheld by $125. So that would be more close, at least, to what that sweet spot would be, having the right sized withholding. Okay, so I hope that maybe going over some of those examples of how to approach step 2 when completing Form W-4 has helped and can help you to make sure that you don't find yourself in a position where you're under withheld at the end of 2021. I would like to make sure that I state a few disclaimers here that the examples that we use were for illustration purposes only, and that they represented a very, very simple scenario where we only had 2 wage earners, where there was only going to be 2 jobs as the only source of income. We didn't take into consideration any interest or dividends or rent, self-employment tax, self-employment income, pensions, which all of those things, if you have additional sources of income, those things should be considered when you complete your own Form W-4. We also didn't take into consideration any tax credits or deductions because Mary and John, neither one expected to have any tax credits or additional deductions. So again, make sure that you look at the situation that applies to you and complete Form W-4 based on whatever relates to your particular situation. As always, especially the more complicated your tax situation gets, the more likely you should talk to a tax professional for additional help. Again, I hope that you found this somewhat helpful, and if you have any questions, I'd be happy to answer. You can either shoot me an email at michelle.e@supportkc.org, or my office phone number is 913-831-4752, extension 115. Thank you.